Since we've all had good lunch, we'll try to keep this panel as fun as possible. It's a very serious topic as well with regard to RBI, and we were trying to, before our panel, try to see what fun stories all of us can share about our experiences with RBI. Noopur, I want to start with you. For those of you who don't know, Noopur is the CEO of NPCI Bill Payments, which is a subsidiary, wholly owned subsidiary of NPCI. Noopur, I want to ask you, how are your interactions with RBI look like? Do they treat you nicely at NPCI, or are they just like how everybody, all the founders feel like?
Well, I joined NPCI Bharat Bill Payment System at a very early stage of our growth. So I'm as much a fintech founder as anyone else. Having said which, over the last 3 years, my interactions actually have been a revelation to me. I've found the regulator to be extremely approachable, very responsive, and forward-thinking. And specifically for the entire fintech ecosystem, I think they're doing a lot of things which shows their proactiveness, including setting up a separate department, having the regulatory sandbox right at the heart of where startups are, which is in Bangalore. And recently they also announced an SRO for fintechs. So I view them as extremely supportive of innovation, of fintech, of a very vibrant yet compliant ecosystem.
Super. When you, just a follow-up question, so obviously in the last few years, NBBL has been doing so much of innovation on bill payments, new categories that have been introduced, the platform's growing. In many of these things, obviously, you know, one of the partners that work with you on this is the RBI. And when you guys talk about this, just want to know, like, what happens? Do you guys write a PRD or a BRD and show it to the RBI for approval? I just want to know what this product development process in partnership with a regulator looks like. And
Nikhil, you've been working closely with NPCI and NBBL, and you're already aware that we've been trying to get kind of approvals which are more broad-based as we move forward. So it is not an approach of a single product or a single category anymore. But way back in 2021, after I joined, I requested RBI to allow us to have a broader play, and they indeed made that available. But even outside of that, anything that we launch, which we think will be good for the customer, we try to bounce it off the regulator so that we do not end up doing something which has ramifications which we have not seen, right? And in certain product categories, so for example, we are about to launch our another innovation on top of BBPS, which will aid smaller businesses do business more effectively. Again, it has been a co-creation process with the entire ecosystem. And every now and then we've gone back to regulator to share what we hear from the ecosystem. So it's a very interesting space that we enjoy, where the co-creation is actually with the ecosystem. We can grow only as much as the fintechs support us, as much as the banks support us. And having said which, we have to be very sure that at least we are not caught on the other side of compliance.
Super. So, many of you will know Sid as a VC, one of the smartest people I know, but today his introduction to the panel is he's the only panelist who's not regulated by RBI. So, so he's promised to be his usual best and share his thoughts. Sid, you've been a VC, and you see founders and financial services deals come your way, fintech founders. Can you give us a sense of, like, what's happened in the last 6 years? What are you seeing right now? And from your vantage point, how have you seen investors and both founders react to like regulatory changes? Is this a bug or a feature? Would love to hear your thoughts.
I think that's a fantastic question. I think the first and foremost thing is the biggest understanding or realization that the Indian fintech ecosystem has gotten is that the tech part is not actually as important as the fin part. And rather than being fintech, they're all slowly realizing they actually belong to a broader bracket known as regulated financial services, where regulation is actually one third of the entire name, but takes up more than 50% of the time that they end up actually spending over there. And as these founders start building deeper, greater and greater enterprises, they realize the amount of time that they end up actually spending on compliance is actually increasing. And at times ends up actually exceeding the time they spend on product and the rest of it. Because as they end up scaling for that matter, they still have this mindset that I'm a young and scrappy entrepreneur managing a small loan book of, let's say, 20 crores or 50 crores or something like that. When they end up actually managing billions of dollars and they become critical components of the overall financial architecture of the nation. And the way RBI looks at it, so if you look at the top 6 fintech companies, the annual profits of our top 3 banks ends up actually exceeding the valuations of the top 6 fintech companies that are there in the world, that are in India. So it actually goes to show that the RBI has a far broader ecumenical view when it comes to fintech and it comes to the role that financial services play. Number 2, it's an unfortunate paradigm that existed for startups that you can end up moving fast and breaking things. This may work for SaaS, it worked for an Uber, it's worked for a number of these companies, worked for Facebook and a number of them. But in regulated financial services of fintech, I mean, you deal with someone's securities or deal with someone's cash. Failure is not an option. Failure is not something, you can't put out bad product where something goes wrong and say, I'm going to recall it back, I'm sorry, my bad guys. Write a really nice LinkedIn post, which will hopefully become an article that people like Moneycontrol, etc. will end up actually covering for that matter. But it doesn't work that way. They have all actually slowly realized that what they would do as a SaaS founder or as a D2C founder fails when it actually comes to fintech. Because you're dealing with actual cash, you're dealing with real world ramifications. And they're actually dealing with the regulator. In fact, for a number of them, dealing with the regulator actually takes them back to their third standard when they end up actually getting hauled in front of the principal and actually hauled over coals. It's that kind of callback that ends up actually happening to them. And the smarter founders are the ones who actually realize this and say, look, I'm not going to go and try to fight the RBI. In the US, you can sue the SEC. When the SEC changed the rules for AIFs for their hedge funds and private equity funds, etc., to bring in more transparency, something SEBI's done at the very incipient stage itself, a bunch of managers got together and sued the SEC. None of our fintech founders are actually going to go there and sue the RBI. It's a matter of fact. So you can't take a US playbook, can't end up bringing it to India, and then put a surprise Pikachu face when it doesn't work. Of course it's not going to work. It's a question of maturity. Understand the way India does. And RBI, mind you, did not actually become a regulator. That is, RBI is a conservative regulator. They've always advertised themselves as a conservative regulator for that matter. And rightfully so, the innovation needs to happen from the ecosystem, but the regulator has to be a backstop. At times, they've actually gone from being a backstop to a full stop. That's an entirely separate problem that we're actually dealing with for that matter. But the role that a regulator plays has always been to have a steady progress to go up. Your investor gets very happy when you grow 50% quarter on quarter. The regulator is shocked when you grow 50% quarter on quarter because they have no idea, unless you have a small base, they have no idea where the absorption capacity ends up actually remaining. So I think this is a kind of notion that needs to come. And the third part is, which you've seen happen in the last few years, fintech founders have finally realized that the RBI is something they can't end up wishing away. And they're making attempts to end up actually reaching out to the RBI and end up actually having a conversation with them, for that matter. And many of them are making the efforts to directly go to the RBI themselves. The RBI, I mean, the R in RBI doesn't stand for receptive. I think everyone knows that for that matter. It stands for reserved, and they are extremely reserved in who they end up actually dealing with. But they are still making stances to end up making that kind of approach. The RBI won't reach out to you. You have to reach out to the RBI. You need the RBI a lot more than the RBI ends up actually needing you for that matter. And that's proven by the point that the RBI has a certain mental model as to how regulated financial services and fintechs in the country end up actually growing, end up actually scaling, and end up actually contributing to financial inclusion. And I think unless you make the attempt to understand the way the RBI thinks and approaches this, you will always fail as a fintech founder. Fintech is not SaaS. You can do a SaaS. There is no regulator for SaaS. You can go do whatever you want in SaaS for that matter and end up actually building it up. And all this fiction of I am a tech-first company and financial services is one element of what you do, pure bullshit. As far as the RBI is concerned, if you are touching money, you are regulated by them. As far as SEBI is concerned, if you're touching securities, you are regulated by them. I think the quicker fintech founders absorb that, the lesser the number of widespread dislocation that we've ended up actually seeing over the last few years will end up actually going away. Some of those were right. Some of the innovation of converting prepaid instruments to a credit-bearing instrument is not financial innovation. It's subversion. And that's the way the RBI looked at it. And people who've been following the RBI and reading the speeches of the deputy governors and the governors and the others actually understand this. So I think fintech founders have become more mature. Fintech founders have understood that tech is no longer going to be the end-all, be-all for that matter. They've realized that financial services is a strong element of what they do, and they've finally internalized that they are regulated. And I think so whatever the friction we've actually seen hopefully ends up abating. There's still 3 or 4 points of friction that will end up remaining and will hopefully end up getting resolved. But I think fintech, the dark days of fintech are over. I think whatever had to be squashed out has been squashed out. The olive branch has been extended to the form of the SRO and other kind of forums that we end up seeing. And hopefully the next generation of fintech entrepreneurship will end up actually creating positive news as opposed to being covered on a MC exclusive, MC insider, or any of the other columns that Moneycontrol has. Be on the nicer part of Chandra's books, not on the other part of Chandra's books.
Super. Sabya, let me come to you. You kind of, for those of you who don't know, Perfios has been, one of the oldest fintechs around. They've been innovating on data for a long time. And you are now in like almost the perfect storm where you're not just now working with RBI, but with account aggregator, a multi-regulatory environment. On the other side, we have the data protection bill. Can you talk about like your experience of, orchestrating, working with the regulator, and also like what kind of, again, when these regulations come, does this open up opportunities for businesses like you? What kind of solutions are you guys seeing? Are there new requirements that come up with like regulated institutions like banks and others? Would love to hear your point of view.
Sure, Nikhil. So first, as you said, part of the entity is regulated, part of the other entity is not, which is the tech part, because we are a tech fin more than a fintech. And the reason I borrow that from Sid, that we are actually a tech first, solving all the financial institutions' problem. But from a regulatory perspective, since you touched AA, let me talk about account aggregator. We were the first to collaborate with the regulator, and we were almost the last to get the license. That's regulator for you. The reason is obviously they don't want to, or let me put it in a positive way, they want to encourage all the greenfield players versus an established player. Good or bad, for all of you to judge, but we pretty much worked with the regulator to craft out the guidelines. That's number one. Number two, how it helps expand the opportunity that like regulation like account aggregator presented was, it became frictionless after that. And we all saw that in the payment side when UPI happened, we could sustain the pandemic so smoothly, I think, other than anyone in the global stage that we have seen. Likewise, I think account aggregator in the times to come will solve a lot of issues. But having said that, have we thrashed out all the current challenges that we see in this space? The answer is absolutely no. Is the model sustainable to run as a business? No. There is no sustainability. Second, who is supposed to solve that? Regulator, the citizens, the bankers, or the people who are consuming the data? It's still a debate. We have been talking to the ministry, we have been talking to the regulators. It's work in progress, let me put it that way. The third bit, it only covers today a bit of the entire financial services segment, which is just the individuals. Account aggregator doesn't support a corporate entity or a joint account holder. There is no mechanism, so it requires a change in the bill itself. So when we say regulator, it is not just regulator, but even the policymakers. And I think that's where the importance of understanding what actually the country will go through if we have to put all this in place. And I think as a company, we have been collaborating and we see enough interest, but translating that to an executable policy I don't see that happening overnight. It will take time.
Got it. Naveen, on the matter of monetization, everyone's question, billion-dollar question, how do you monetize UPI? Okay, I'll add context to this. For those of you who don't know, Yes Bank, Naveen is the CDO at Yes Bank, and he's known in the banking circles as the UPI whisperer. They're the largest market share in UPI, more than 60% today of the market. Like,
I would prefer to keep it.
yeah, so you can go to the NPCI website and you'll see Yes Bank, which is a surprising winner because of their partnership with PhonePe and JustPay and many other companies, and now recently Paytm. You guys obviously did an amazing job of, helping business continuity, of migrating with the regulator, working closely with NPCI for the Paytm fiasco from what happened on UPI onto Yes Bank rails. Given that you guys had a ringside view of what kind of went wrong, I want to get your perspective on, was that like overreach from the regulator? I know you'll have a politically right answer for this, but like, what kind of controls have you guys put in place, and what would your advice also be to companies which have been doing this? At least like some baseline, basic hygiene stuff that one needs to take care of so that something like this doesn't happen.
Okay. So first, to put some numbers to what Nikhil was telling, yes, we do 1 out of every 2 transactions on UPI. We also do 1 out of every 3 transactions on AEPS. We also do 1 out of every 6 transactions when it comes to micro ATM. The list can go on. All this was possible only because bank has been working and partnering with the fintechs. And we have been doing this for more than a decade now. And definitely we have interacted with regulator, and regulator knows us as a bank which has been working with fintechs at large. For us, 3 big takeaways. That 3 takeaways will sum up for all the learnings that we had over the last 1 decade. One is, whenever there is a customer involved in transaction, does the regulator, as a regulated entity, do we have the oversight of the details of the customer? Do we know the customer? Do we have the due diligence? Which means, if it is a merchant, what do we know about the merchant? If it is a customer on a co-branded wallet, what do we know about the customer in that particular case? That is point number 1 that they look forward to. Second one is, if these customers tomorrow are facing a problem, as a regulated entity, have you done sufficiently good to put customer service framework and grievance redressal framework to make sure that this customer tomorrow is not running from pillar to post, and they have an address or destination at Yes Bank as a destination, so that they can come and the buck stops here. It should not really go as a exception into a banking ombudsman or a regulatory, or even someone can go to the court also, right? So that is something, as a partnering framework, do you have as a regulated entity, we are expected to spend sufficient time to make sure that this particular framework is there. And third one, which is very, very critical in the last 3 to 5 years, I would say, given the UPI growth and given that now we are talking about billions and billions of transactions. I think today we do close to 500,000 transactions, 500 million transactions every day as a country. When 500 million transactions are happening, do we have sufficient mechanisms to monitor these transactions? As networks, Visa, MasterCard, NPCI, RuPay are doing something, but that is not sufficient. As a bank which is actually processing these transactions, do we have sufficiently good visibility on transaction pattern, good visibility in terms of finding out exceptions and reporting them to the necessary authorities? If these 3 things are done very well, I think most of the problems that we would have seen in the last how many ever years, in whatever examples that you would have quoted, whether it is recent examples or even examples 3-4 years back, all of them can be actually, if you want to do a RCA of any of these incidents, it will fall into one of these 3 buckets. That is what is our key learning. And most important learning for us is, because fintechs, like some of our panelists also said, they feel that they are tech first and their focus is on tech, and they are also having excitement to solve some need. as a regulated entity partner with the fintech, it also helped us to realize that we have a larger responsibility in terms of saying no to few things and educating why we are saying no. That is what is my key takeaway from all the regulatory interactions and also the fintech interactions over the last decade.
Super. We're running short of time. We could go on. Very quickly, one quick rapid fire we'll do. If, we were to ask, like if this I wish, right? And that's the starting, I wish. And it could be a wish to a policymaker, government, regulator, or Noopur, to the ecosystem as well. What would your advice/wish be?
I wish the ecosystem comes together on common platform more often. It is kind of dispersed at this point of time with most of the banks in Mumbai, most of the fintech startups out of either Delhi NCR or Bangalore. We are trying to create those platforms, but we have to do it much more informally and in many more forums. So I wish that happens.
Sid, I know your list is long. Only one today.
I unfortunately can't wish to be off record, but that's a separate thing. The only thing I wish that the RBI truly understood the pain that a fintech entrepreneur actually goes through and the amount of effort they put in before they release these one-line deadly circulars that actually start destroying business models. None of these are bad intent. It's just the fact that there was regulatory ambiguity. They managed to end up actually looking at that as a market opportunity. That doesn't mean they're necessarily bad. So I think they need to move away from that kind of attitude. If they do that, that would be great.
Super. Sabya?
So from one wish, but that has repercussions, from third in the world to become first in the world as fintech. We are today ranking third. But to become first, the policymakers, the regulator, and the fintechs have to work together, not against each other or forming policies which doesn't support each other.
Naveen, UPI MDR back?
I wish we make money when we are doing so much of hard work. So I think we all make money when we are also putting up so much of hard work. That solves your monetization problem.
All right, guys. Thank you so much. It's been such a pleasure. Please give a big round of applause. Thank you.